Good evening, everybody. I'm Pierre Roberge, the Daily Trader. It is January 3rd, and we are going to take a look at Tesla stock from a technical analysis perspective. My goal in doing these videos is to help you understand how you can use technical analysis to make better trading and investing decisions, but I am not a financial advisor, so please do your own research and make your own decisions. Happy New Year, everybody. This is my first daily video of the year. Let's start this year with a bang. Tesla was up $143 today. That's 13.53%. This is incredible. So we closed at 1199.78, very close to the 1200 resistance that we were looking at. But we are also looking at that another resistance. So we have in this case a double resistance. This is how I call it. So the second resistance is 1210.35. And it seems that post-market, we seem to be wanting to touching this 1210.35 because post-market, we are up $7.19. It's changing as I speak. And it's at 1207 so far. So why a double resistance? Sometimes we have a resistance that is touching the bodies of the candles, of some of the candles, and sometimes we are aiming for the wicks of the candles. And in this case, 1200 was used on November 8th. It was also used on November 22nd, but 1210 was used, and let me make this bigger. So 1210 was used on November 1st, November 3rd, and also as a support right here. Look at November 4th and 5th. So this is why we have a double resistance right here. If we break 1200, it does not mean that the stock is going higher that much. If we break 1210.35, then this means that we are going maybe further away. So it's important to make that distinction because this can become a bull trap. Okay, so let's look at the 1 hour chart to understand how this played out. We have a huge gap between where we closed on Friday. If you remember, on Friday, we were looking at the support at 1054.69. We were looking at that support and we concluded that if we were breaking that support, then chances are that the stock was going to go down. But we held 1054.69. And we've looked at the 5-minute chart on Friday, and we look at the 5-minute chart and we saw that we were actively, as a matter of fact, bouncing on the 1054.69 support. So this was a great end of the week with a positive note with this little green candle. So during the weekend on January 2nd, Tesla released, and let me check that with you guys. I did that also on my video, on my weekly analysis video I do on Sunday. So I did that video live where I looked at the press release. So the press release for Tesla was as follows. Tesla produced 305,000 cars and delivered 308. And let me show you here also on Hyperchart. Tesla. So look at this. Tesla delivered 241,000 cars on Q3, and now we are at 308. This is a huge jump. And the forecast that I was looking at were predicting maybe 285,000 cars, and Tesla basically beat that. I think this is why we are having such a big reaction with Tesla today. So big gap. The first candle was not that bullish in itself. Yes, there's this big gap that was bullish, but in terms of the layout of this candle, this was just a small green candle with a longer wick at the top, a smaller wick at the bottom. So a longer wick at the top tends to mean that there's a longer selling pressure than the wick that is caused by the buying pressure. But then second hour, third, fourth, fifth, sixth, seventh was just crazy and the stock just kept going up. Huge volume on the first candle. We needed that huge volume to break the inertia And then the volume receded a little bit, but the stock kept going on, and with an acceleration in volume towards the end of the day. This is looking super great. Let's go back to the daily chart. So now effectively, if we pull back a little bit on this daily chart, so we have reached 1200 or 1210. This is the congestion zone basically that we have been in since October 25th. This is a big congestion zone right here. So we have reached the top of the congestion. So now the big question is, are we going to break this? I don't know. We are going to have to take a look at Tesla in the coming days to see what is happening. What we need to take into account is that Tesla has been in this huge ascending channel. And the fact that we have reached the top of the congestion zone, does that mean that we have reached the top of this channel here? So let me just adjust this a little bit. So we have 3 resistance that we need to break here before going higher. We have the $1,200 resistance. We have the 1210.35, and we also have 1220. So this is a major area of resistance. If we break this, then we can easily reach, and let me just move my scales a little bit. We can easily reach, I would say, close to 1300. 1300. If we go very fast, the resistance is going to be at 1297 or so. And if we reach it a little bit later, then it can go higher than 1300 because this is an ascending resistance. It changes every single day. So if we reach it soon, it's going to be a lower number that we are going to deal with as a resistance. But if we reach it later, then it's going to be a higher number. I cannot give you an exact number because it depends on when we are going to reach it. If we reach it tomorrow, then I can tell you that I would say 1298. If we reach it in February, I would have to say it would be more like 1332. This is the target. This is where Tesla can easily go to. So let's just keep in mind. Let's now look at our indicators to see how they were impacted by this big move. Stochastic, which had been in the region around 70 when we were here touching this first resistance. And because stochastic did not go under 60, we were confident that this pullback was just a temporary pullback. If stochastic had gone down lower than 60, then we would have maybe thought, maybe the pullback is not just a pullback, but basically we might have been caving in from this downward resistance. But because stochastic was over 60, we were confident that the stock would be continuing and accept. And this is exactly what the stock has done today. So stochastic is now at 99, so hyper high. This is incredible. RSI is not even overbought, so it still have some ways to go. So it's still not overbought. So this means that Tesla still has some room in it. So from a technical perspective, there is still room in the stock to go farther. The 2 MACD lines that have crossed the 0 line. So I'm going to have to get my second green thumb up. So the first green thumb up is for the breakover bullish when the blue line goes over the orange line. And the second green thumb up, I use it when the 2 lines go above 0. And the 2 lines going above 0 is something really interesting. This is telling us that things should be moving along quite well and we should be in a nice bull market. This is exactly what DMI has been telling us since, let me tell you exactly, since December 22nd. So December 22nd, right here, this is when the DMI told us, yes, you can buy this stock. So you see all of our indicators are pretty much telling us this is a great bull trend. So let's just write this one. Of course, the resistance and the trend lines in general are more important than the indicators, but it's always nice to have this confirmation from the indicators when we have a nice move. So all in all, fantastic. I hope you are making some money, at least on paper. Let's watch together what Tesla has in store for us for the rest of the week. So thank you very much for watching. Thank you for liking, commenting, subscribing. You can click on my TradingView affiliate link if you like what I do. You can also become a member. I'm going to wish you a great evening. We are going to talk tomorrow, and I'm going to tell you à la prochaine.